Markets on edge. Will the next trade deal spark a rally or a meltdown? The markets have been riding a roller coaster as investors anxiously await the next big trade deal. After last Wednesday's 90-day tariff pause, stocks chopped through a 200-point S&P 500 range, relatively muted after last week's wild swings, but headline-driven volatility is still very much alive. So what happened? President Trump touted big progress in talks with Japan and met with Italy's PM Meloni, yet no concrete deal materialized. The longer a pact is delayed, the higher the stakes for both the economy and your portfolio. On the bullish side, any deal announcement could trigger a relief rally, maybe even clear key resistance levels at SPX 5,550 and Nasdaq 19,000, while paving the way for follow-on agreements. But until we know real terms, uncertainty reigns. Fundamentals aren't all gloom. Q1 earnings so far are healthy with 6% revenue and EPS growth, the labor market stays strong, and softer surveys haven't yet shown up in hard data. Plus, Treasury yields pulled back after dovish Fed commentary, giving bonds a breather. On the flip side, stocks trade at a forward PE of 20, so there's no easy wind at investors' backs. Looking ahead, the major indices are inching higher today on constructive trade comments. My simple forecast? If a deal drops, markets turn bullish. If nothing happens, expect more choppiness or a pullback. And watch out for a slew of economic reports, leading indicators, home sales, durable goods, and big earnings from Tesla, Boeing, Google, Intel, and more. Technical traders keep an eye on the equal weight S&P's 200-week SMA to stay bullish and for the Nasdaq 100. Breaking the April low at 16,542 or the 19,000 ceiling will set the next direction. And don't forget crypto fans, the first US XRP ETF just launched with a key SEC decision looming on May 22nd. That's it for this week. Hit like if you learned something, subscribe for more weekly insights, and drop a comment on what you think the next trade deal will bring.